Welcome back, my beautiful friends. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York, iHeartRadio. I'm your host, Zen Sams. Up next in our innovation and tech segment, brought to you by Caldwell Soames and OGPay.com, we're joined by regular contributor Paul Caldwell, and today he's joined by David Morgan, a.k.a. the Silver Guru. David is a widely recognized analyst in the precious metals industry and consults for hedge funds, high net worth individuals, investors, mining companies, depositories, and bullion dealers. He is the publisher of The Morgan Report. It's a world-class publication designed to build and secure wealth. In addition, he's the author of The Silver Manifesto. Today, we're chatting silver, what the Fed will do next, how inflation is impacting us, and where we go from here as 2023 approaches and a new year is to unfold. What will Q1 and Q2 look like? Silver is real money, guys. Like gold, silver can act as a hedge against inflation, which may make it a great option when it comes to diversifying your portfolio with precious metals. Gold and silver have traditionally been more resilient over time, holding or increasing in value as the dollar loses its buying power. Unprecedented government spending, supply chain disruptions, and global energy shortages have sent prices soaring this year. Americans are understandably concerned about how to mitigate the damage of inflation that has been running at multi-decade highs throughout this year. Unlike fiat currency, there is a limited global supply of silver. In addition, silver has held value around the world for centuries, and it has a wide range of uses that should help maintain demand over time. How does one invest in silver? Is silver a good or a bad hedge against inflation? Is investing in silver a good idea? Well, welcoming now to the show are my experts at hand to break it all down. Welcome, David Morgan and Paul Caldwell.
Thank you.
All right, gentlemen. David, I'll start with you. You have been quoted saying silver is something that's needed, it's essential, it's imperative. You cannot run a society without silver. Explain what you mean by this.
Anything electrical or electronic requires silver. You could substitute copper, but you would not have the efficiency, and you would also not have the reliability. So nothing conducts electricity better than silver does. Nothing conducts heat better than silver does. So the world we live in, with the iPhone, iPad, flat screen TVs, anything that we use in modern society that's plugged in or even connected to Wi-Fi requires silver. It's inelastic because there's so little used in a cell phone that it basically doesn't add to the cost. So price inelastic means if the silver doubled, tripled, went up tenfold, it wouldn't really affect the price because so little is used in that product. Same with your refrigerator, your washing machine, your toaster, your flat screen TV, your keyboard, microwave oven panel, any of those things just use a very small amount. But without it, you couldn't have the product.
Very true. So bringing me to the next valid point, Paul, one of the most obvious selling points for silver, to David's point, as an investment is the large number of uses it has, right? So silver is used in bullion and legal tender coinage around the world. It's also one of the most common metals used in jewelry. It has a wide range of industrial applications as well. So more than 36 million ounces of silver are used each year in just auto manufacturing. And as recently as 2019, the photovoltaic sector, so the conversion of light into electricity using semiconducting materials, that's that sector, accounted for about 10% of total silver demand, or about 98.7 million ounces. Okay, so there's a lot of use there. We see it. Each solar cell uses an average of around 111 milligrams of silver. So again, to David's point, Paul, we're seeing this recurrence. It's also an extremely common component of electronics, to his point, and it's used in soldering and other industrial applications. On OGPay.com, there is a precious metals tab, and users are actively trading metals. Talk to me about how fintech apps, Paul, are facilitating the trade of gold and silver today.
Well, I think the metals overall, to David's point, specifically with silver, is it's abundant, it's needed, and it's been around forever. And it's the things that are being developed and that get newer and newer. Really, I mean, they still require a component of silver. But from a hedge perspective, or from an investment, or from a digital assets perspective, it's very interesting because silver can also contribute to a person's diversity in their portfolio, for example. And you can see in some of these platforms like OGPay, people diversifying their portfolio, their digital assets portfolio, along with maybe they have some cryptocurrencies that they're holding at the moment. Let's say a USDT, for example, which is pegged to the US dollar, and they have a correlate in an equivalent amount of silver. And it's very interesting to watch those two, play one not against the other, but with the other in a digital assets portfolio.
And you guys do such a fantastic job at really diversifying and allowing for not just the applications that you have behind the technology to be able to be, frictionless and to be able to be used properly, but really solving real world issues here by financial inclusion, which we'll get to in a sec. David, there are plenty ways for investors to bet on silver indirectly via silver stocks and ETFs, exchange traded funds. Investors can buy shares of silver mining stocks. The higher the price of silver climbs, the more profits these silver miners make. Some of the largest, most popular silver mining stocks include Pan American Silver Corp, right? PAS, SSR Mining, and Hecla Mining. What do you say to silver stocks and ETFs?
Well, first of all, Zen, what I say is you need to buy physical metal first, but once that's accomplished, then we go to the stocks. And I really emphasize top tier, cash rich, unhedged mining companies, and you just named 3 of them. So I've taught from the beginning that big money goes into big companies. It's the safest, easiest. You get reporting. You basically know what's going on. You get a pretty good feel for how the company is able to expand. I bought Pan American at $2 a share. I think it's at 16 now. It's been as high as 40. The dividend I get on that stock is basically 10% of my downstroke. Yeah, it's only 1.5 or 2% relative to a new purchaser. So these are investments if you pick the right ones that can really go. Hecla was the best performing stock in 1979. It went from $5 to $50 on the New York Stock Exchange. No one outperformed Hecla Mining. It was the Bitcoin of the day. I put it in the Morgan Report at 50 cents and sold it at $5. I accomplished a 10-bagger for my readers before anyone could spell the word silver. This was way early in the cycle when basically no one other than yours truly and a few others would fall in the silver market.
Fantastic. I love that. Was such a perfect answer to that question. Paul, one of the primary goals of financial technology, we've been talking about this often on our segments, is financial inclusion. And this goal seeks to provide access to financial services to billions of people who are considered unbanked. Okay. This is a noble goal indeed, because access to money is the foundation for participating in the economy. This brings up a very important question. What type of money should they have access to? So you've designed OGPay carefully, and you have removed the friction using technology to provide safe, smart, simple access to even gold and silver. That's your contribution to FinTech's goal of financial inclusion. More people now have access to an important form of money, and that's a win-win for everybody. Talk to me about some of the liquidity provisions embedded into OGPay, and why does this matter in a FinTech app?
Well, specifically as it relates to a hedge against inflation and bringing metals, for example, into the conversation, it allows people around the world through the technology to be included in the conversation. That technology has enabled people in other countries and in communities where maybe they're unbanked or underbanked to have a mobile wallet, to have access to banking like services, to be able to buy and sell gold or silver, to be able to participate with a virtual or a physical Visa card and use the money that they load onto the platform to include themselves in those markets through that process. And so it's in more of an aggregate. To David's point, I agree. Big money follows big companies, and in that space, and that's a wonderful way to simple and simple and correct, I believe, way to put it. And I find that report, the Morgan report, is a go-to tool if you want to talk about silver for sure. But I will tell you that the technologies that are out there today and in the FinTech space are enabling more and more people to be included in that conversation when it comes to creating hedges against inflation. But for those people, it's just about allowing themselves to develop a personal economy to be included in the broader global economy.
So important. Financial inclusion is extremely important. In a free and open world, everyone should have a choice of what type of money they use to meet their personal financial goals. And this means access to national currencies, cryptocurrencies, complementary currencies, and of course, gold and silver bullion. And gold and silver as money have been an important part of the global economy throughout recorded history. Unfortunately, over the last 100 years, access to these precious metals has been restricted. At times, this restriction has been by government decree, as it was the case in the United States, 1933 to 1974. So, Paul, these fintech apps are extremely important, especially if we want to break out of this potential, government control. Should it happen again? Probably not in these days. David, let's go back to really looking at, is silver a good inflation hedge? Because there's some statistics here that I want to run by you. So in 2022, this year, US inflation reached its highest levels in roughly 40 years. Okay. But there have also been several other periods of elevated inflation since the beginning of the 1970s. And silver has had mixed results as an inflation hedge. So from 1980 to 1984, inflation averaged 6.5%, but silver prices fell 22.6 annually during that period. And then inflation averaged about 4.5% from 1988 to 1991, but silver prices dropped about 13% annually during that time. And since April of 2021, the monthly US Consumer Price Index reading has averaged a year-over-year gain of 6.8%. But since April 1 of that same year, the price of silver is down about 25%. Some would get worried. What do you say to this, Dave?
Well, I never argue facts. First off, let me say that I'm going to start with gold really quickly. The Bible on gold was written by Professor Jastrom. It's called the Golden Constant. He went back centuries, back about the 13th century onward, and looked at what happened to commodities prices versus gold. And what he determined is it's the golden constant, and that's the name of the book. In other words, gold will continue to preserve your wealth, which is step one. Silver, after that, he decided, well, what does silver do? So he did the same type of study, called it Silver the Restless Metal. And silver the restless metal, what he determined is then basically what you said, that silver does, especially in a deflation, it has mixed. Sometimes it did well, sometimes it did not. And in inflation, it usually did better. And the book, I think, was finished in around the early 50s. I forget the exact publishing date. The conclusion in the preface was that silver was one of the best inflation hedges that there are. Back to your point, well, I'm not going to argue the facts, but we have a lag. I just got through the Silver Symposium. And what we found was in the time frame, one of the time frames you mentioned was silver didn't do that much during the 60s. It went for the monetary value of $1.29 an ounce. And it took about 14, 15 years to January 1979 to get it to $6. All right. From $1.30 to $6 over that 15-year time frame. Yes, it was a real gain in inflation adjusted terms, but not much. But what happened was it played catch up rapidly. From January 1979, buying silver at an all-time high. You're buying high, not low. It went from $6 to $50 in 1 year. You made 850% on your money in 1 year. Again, outperforming. It was the Bitcoin of its day. Everybody that bought it at a new high and held it for 1 year was ecstatic. Then it had actually caught up to the monetary printing that had taken place during the 1970s. So it did do its job. It just did 90% of the move in the last 10% of the time. And that is the way this market moves. And I'm tired of saying it, but that's what you got to be prepared for. Silver has a propensity to spike high and spike low. And if you're not on the train when it rockets up, you're going to have to get a laser to catch up and get on the rocket because it really moves.
That's true. Very wise words. Well, we are out of time, gentlemen. Thank you so much both for coming on. Paul, always a pleasure chatting with you. David, thank you so much for the insight.
My pleasure.
My pleasure, Zen.
That was our Innovation and Tech segment brought to you by Caldwell Soames. Is investing in silver a good idea? Well, because silver has a relatively weak correlation to stocks, bonds, and other commodities, it can help diversify an investment portfolio. As experts vary in the recommendations for how much investors should allocate to gold and silver, but a good rule of thumb is to allocate about 5% of your portfolio to commodities as a whole. It's simple. Of course, that allocation could be higher or lower based on your specific goals and investment horizon. You definitely want to consult with experts like the ones that we just spoke to. Definitely head, without a doubt, to themorganreport.com for incredible insight and plenty of information. And you can also look at the book secondchance.com and thesilvermanifesto.com. And then, of course, for all your banking needs, you have to head to ogpay.com. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York, iHeartRadio. We'll be right back after this.
A Moment of Zen is brought to you by Caldwell Soames Incorporated, investing globally in transformative businesses like Original Digital Corporation, or ODC. ODC develops advanced consumer and commercial fintech solutions such as OG Pay, which will transform the way you manage your money. From sending and receiving money globally for free, paying for goods and services in person and online, pay bills, buy and sell digital currencies, all while earning interest. OG Pay is easy to set up, FDIC insured, and your information is secured. Check out ogpay.com.
Welcome back, my friends. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York, iHeartRadio. I'm your host, Zen Sams. Welcoming back to our innovation and tech segment brought to you by Caldwell Soames is the awesome Paul Caldwell, chairman and CEO of Caldwell Soames, and David Morgan, author and founder of The Morgan Report. Welcome back, gentlemen.
Thank you.
Nice to be here, Zen.
All right, Paul, let's come back to you. So the stock market has been on a roller coaster ride, largely because of Wall Street shifting expectations about whether the Federal Reserve is going to slow down the pace and size of its interest rate hikes. Here's the thing, though. Investors, in my opinion, are paying way too much attention to what Powell and other Fed members are saying about the economy and not focusing enough on numbers that show how the economy is actually doing. So unless the CPI report shows a notable decline in pricing pressures, the Fed is probably going to stick to its mantra that more large rate hikes will be needed for a longer period in time in order to finally squash inflation. Paul, what are your predictions here?
Well, Zed, I'm not really very good at predictions. However, I will tell you that I believe that there are some fundamentals at play. Anytime you hear jobs data, really great jobs data, there's sort of an inverse correlation. That's not necessarily a good thing for the stock market. There are a lot of reasons for that, but if you look at the correlates, you'll find that to be true over time. I will tell you that I think that the SMEs, the small and medium-sized enterprises, are really where there's significant and substantial effect from these raises. And when you go 400 basis points up in your interest rates, and access to capital for small and medium-sized enterprises gets choked and is really, really difficult for them to obtain, especially short-term capital to fund cash flow. It becomes a significant challenge because the money that they have access to, it's debt on their balance sheets, but that's one thing, a balance sheet impact. But the interest that they have to pay on those loans affects their P&Ls substantially. So I think as we go into 2023, we're going to continue to see more and more need for access to capital, short and midterm capital for these small and medium-sized enterprises. I think that's a major area to look at, and I think that's true whether that enterprise is a privately held company or it's a publicly traded enterprise. There is a very real effect now, and there's a downstream effect. But I will also say that historically, I mean, it's just proven time and time again that here we go into this inflationary period, then we have a bit of a recessionary period, and then at some point come out of this thing. And if you look at the basis right now and the indexes right now and how they trade and where they trade on volumes and so on, there are a lot of things to look at. But our perspective here is that as we start to come out of this, it's going to be a significant lift. So we're bullish in the medium and long term. We're concerned about the effect on SMEs in the short term.
Yeah, and what you said is actually very true and great point of view, because the Fed is still data dependent, meaning it will set policy based on the performance of the job market, inflation, consumer spending, and a host of other factors. David, what are your predictions, or what's your point of view of what Q1 and Q2 in 2023 is going to look like for us?
Well, I'm of the position that the economy, which is different from the financial markets, is in a contraction. You watch what's happening in China, which is basically the productive engine of the world. They're contracting. We've got all kinds of different reasons why we have supply chain breakdowns. We have an agriculture situation basically across the planet. And of course, without food, nothing happens. Without energy, nothing happens. We've got an energy problem with what's going on with the sanctions and what Russia's doing. So I see a contraction going into the first and second quarter of the next year. And I see us globally tightening our belt. I don't think there's anything else on the economic side. On the financial side, I think you're correct, Zen. There's going to be a continuation to keep the dollar strong. If we pivot, the Fed pivots, it's really a cue to the markets that the Fed's thrown in the towel, and they're going to print to kingdom come. And if they print to kingdom come, that means that there's a possibility, not a surety, that we could go into a somewhat hyperinflationary mode and people give up on the dollar altogether. So they must keep the dollar strong until something breaks or we transition into the next financial system, which I think is waiting in the wings.
Crazy times we live in. Crazy times we live in. Paul, closing thoughts.
I would just say that if you're watching this, or you're in the you're concerned more about your personal economy or your portfolio. I always tell people, look, stay the course. It's always a bad idea to sell to sell down. It's always a better idea to think about how you can cost average on some of these things going up. If silver, spikes again, everyone will be saying, geez, I wish I was in silver, because that's what always happens. If you want to add silver to your portfolio for a hedge, I think, now's a time you could buy. It's a good time for that. So I just think that it's a time for people to think about what their long-term goals are right now, because you can get some deals right now, I think, in the market where I think the market's going to reward much higher valuations going forward. But I think it's a longer-term thing. To David's point, I agree that we're in for a couple more quarters at least of pressure on the markets.
Well, may the best man still be standing at the end of all of this, and I think we're in a good shot to keep this boat afloat here, because we got the most important thing, knowledge, and knowledge is power. And when you educate yourself and you read and you really take the time to look at an investment under the hood, really evaluate everything properly, but you do your homework and your due diligence, chances are you'll come out winning. But most people don't. That was our innovation and tech segment, brought to you by Caldwell Soames. Paul Caldwell, thank you so much for coming on. What a pleasure chatting with you.
My pleasure, Zen.
David, thank you so much. Great guest, great content. And we're definitely sending lots of people your way.
Zen, thank you so much.
Absolutely. Guys, definitely check out David Morgan, themorganreport.com. Definitely head to Caldwell Soames by checking out some of their more incredible properties like ogpay.com, where you'll get to see my face greeting you with all the trust in the world, because that is one of my favorite fintech apps out there. It's made my life so easy as a mom. Everything is at my fingertips. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York, iHeartRadio. We'll be right back after this.